The first video that you're watching, this is Sergio Briones. This channel is about personal finance, early retirement, business, rental properties, real estates. So if you guys have any questions, feel free to subscribe to the channel and drop a comment on any question, any video that you might be interested in. Let me know and I can make a video on it. So today I thought I would make a video on how I am planning on paying off all my personal debt in 4 years. So my personal debt includes 5 credit cards, student loans, my wife's college tuition, a 2019 Ram that I bought about 10 months ago, and a $120,000 mortgage that on my house. So I plan on paying all that debt in 4 years using Dave Ramsey's famous debt snowball. So if you guys are not familiar with a debt snowball, it means that you should begin attacking or paying down the bill or the loan, the debt I should say, with the smallest balance. So using this strategy, you forget about the interest rates, you forget about the payments. You're gonna attack the one with the lowest balance, and doing this will give you a boost in confidence. Once you pay off, let's say a $150 credit card that you pay it off, it's gonna give you a boost. And if your payment was $25, now you're gonna use that $25 that you were paying on that credit card and apply it towards the next lowest balance debt that you have. So the ones in yellow, as I explained in my other videos, are debt. The ones in light blue are monthly bills that I'm always gonna pay. So I'm always gonna pay Netflix. I'm always gonna pay it. I'm always gonna have these payments: the gym, Spectrum, the cable, the internet, the cell phone bill, water bill. So all these are monthly bills that I'm never gonna stop paying car insurance, light bill, water bill. So this is my income, a weekly $2,000 a month. So after paying all my bills, after paying all my bills, and after paying myself and after saving for car maintenance, miscellaneous, daughter's allowance, son's allowance, all this, I go through all this in my other video called envelope budgeting. So I'm not gonna cover it in this video, but after paying all that, I am left here, as you can see, with $233 every week. So I just started doing this in October. So ever since I started, I already paid down Sam's Club, which I owed $180. Ulta, my wife had a credit card there. She would buy cosmetics. She owed about $115. We already paid down Target. She owed like $90. We paid down Amazon. We owed like $86. So we already paid down all this debt. And the way I paid it off is I would get the $233 every week that would be left over after paying everything, and I would apply it. So the first $233 I paid it to this bill, and of course I paid it off, so I can get rid of this already because it's already paid down. And as you can see, the second week I now have $239. So I paid off these two bills, which is $150 and $90. And on the third week, we paid off $86 of Amazon. Let me just renumber this so it can be numbered correctly. And now I have $257. So I have about $250 that I can apply. So instead of paying instead of paying $10 a week on my Capital One accounts, I am now gonna pay $260 on my Capital One account. So right now I think the balance is about $11.50 because I gave about $80 left over from the last week payment. So as you can see, money left $7. I don't mind having no money left because I already pay myself. As you can see here, I already pay myself $100 a week. I already have money for gas. I have money for church. I'm saving for vacation fund, for haircuts, for holiday gifts. So I'm already saving in all areas. There's no point in having this money here. So in 3 or 4 weeks, I should be. Tomorrow I'm getting paid. So tomorrow I'm gonna apply $260 to this debt. So I should be around $800. Yeah, about $800. About $800. So in 3 weeks I should have this paid off. And once I pay it off, I'm gonna apply the $260 to the student loans. So here's where I stand right now. So now I'm gonna do an example of how I'm gonna pay it off in 4 years. So let's say I pay this off in 3 weeks. So I erase this. So now I have 260 plus 228. It's gonna be 288. So now I'm gonna be applying 288 to the student loans and 288 to the student loans. And I have a mortgage calculator here. So if I owe $87.31 and I have about around a 6% interest rate, I'm gonna be paying around $12.48 per month. So I should be done, according to this amortization calculator, I should be done in around 7 months. So 1 month for the Capital One and then 7 months for the student loans. That's 8 months total. So in 8 months I should be done with this if everything goes as planned and if I follow this strictly. So the 288, so it's gonna be paid off. So I guess you get the point. Now the 290 that are left over, I'm gonna apply it to the 169 to this debt. So 290 plus 169. So I'm gonna be paying $459 for this for my college, for my wife's college. So following this strategy, I should be out of debt in 4 years, including the mortgage. And another way to figure this out is by this. So I owe right now $186,000 that I'm trying to get rid of, which includes the mortgage, the truck, my wife's tuition, my student loans, and the Capital One account. So it's $186,156. And I am applying the payments in yellow. So let's add them up. I'm applying $260 plus $28 plus $169 plus $230 plus. On this one it says $500, but I'm actually not paying $500 because this one includes escrow, which is taxes and insurance. So this payment is more like $400. So I'm gonna put $400. I'm gonna use $400 instead of $500. So I'm paying $1,087 a month. So we get the mortgage calculator again. So I'm gonna input $186,156 as my payoff. For the interest rate, I'm just gonna average. As you can see here, the capital one is 25%, which is very high, but I only owe this one. It's gonna be done in 3 weeks. The next highest is the student loans, which is 6.8. I'm sorry guys, excuse me. And the college tuition is $0. The RAM is 5.9 and the mortgage is 4.4. So I'm just gonna use around a 6% interest rates. Yeah, I think it's being fair. So we said 1,087 a week. 1,087 a week times 52, which is 52 weeks a year, and then you divide it by 12. I'm doing this so I can know how much I'm gonna be applying per month, because the figure that I added was on a weekly basis. So once again, if you guys got lost, it was 1,087 a week. Why 1,087? Because I added all the money that I'm applying to the bills in yellow, to the debt in yellow. So it's 1,087, and then you multiply it times 52 weeks in a year, and then I'm gonna be applying 56,524 a year. But then I wanna know how much it is per week, per month. So on a monthly basis, you divide it by 12, it's 4710. So here on the mortgage, on the amortization calculator, I'm sorry guys. On the amortization calculator, I inputted the 186,156, which is my total debt, 6%. I put 3 years and 8 months, and then it sort of gives me the payments that I'm gonna be applying. So it's about 3 years and 9 months. So I said 4 years, just in case. Just in case 1 month I need the cash and I use it. But I made this video to show you what the power of $250 a week does to your bills and to your debt and to your mortgage. Only $250 a week extra, which I was supposed to be saving for my emergency fund, and I decided not to. And the reason I decided not to have an emergency fund as of right now is because, as you can see, I owe other businesses, and if I do have an emergency, I have other areas where I can get money in case of an emergency. I can borrow money from my businesses. So that is why I decided not to. This might not be the case for everyone. It is important to follow and at least have $1,000 or $2,000 in savings for an emergency fund. But since I have all those other assets that I can get money from, that's why I decided not to, and I decided to apply the $250. So let me know guys. I know this setup, I could have done the video better. I'm still trying to learn how to film the screen and have my little face here. Have my face here in the camera. I'm still learning to do that. I'm still researching, so be patient with me guys. But the point is that using the debt snowball will get you out of debt fast, and especially if you start budgeting your money, and you start assigning every dollar. You need to know where every dollar is going. As you can see here, I know where every dollar is going, and I know that every week I should have $7 left over in my account. And if I don't see those $7, then there's a problem. So if you guys have any questions, let me know. Once again, my name is Sergio. If you like the video, give me a like. if you want to continue learning more, subscribe to the channel. And if you have any questions, drop a comment. If you have any topics in particular that you want me to cover, just let me know. Thanks a lot, guys.